So looking at the euro, again, reviewing high of the day, low of the day, looking at some very basic bank trading setups that are going to show up over and over again, the same scenarios, because there's a high and there's a low, and they need to trap volume in the wrong directions before they reverse the markets or continue trends. We look at Monday on the euro, again, right off the first bar open of the day, they go up. They continue to work up. They're expanding the range in the upward direction before engulfing in the gap time and coming down as we head into our Europe-London 12-candle window. They hit the previous day's low. This 3-bar pullback is all inside of that bear candle. So this is nothing but consolidation inside of a downward move. The continuation bear candle is still all just one big bear movement down. There is no pullback in there. So when traders start counting pushes, you need to be aware that if you're inside of a bar, that is not a pullback or a push. But the market then proceeds to break through before pulling back on an engulfment. We have a breakout pullback. This is our first pullback, giving us a low of the day structure. We have a low of the day structures. Now, some traders have gone long here. If you were to have gone long here and it clears these lower highs, this is where I go to break even. If this is a stop hunt reversal, this market will layer on top. If it's a trap, it will come back down and hit the low. We just need to understand this is not pullback. This is not a low of the day. This is not one push, two push, three pushes down. Although on a smaller time frame it is, but on the 15-minute charts we are inside of one candle. But this engulfment at the low gives us our low of the day. Then the market proceeds to work back down into the low. When it gets to the low, what does it do? How does price behave when it gets to the low of the day? It goes sideways and gives us a bullpen hammer. We have traders chasing this move long, okay? If you were in this trade and you were not at break even and the market closes down back inside of your bar, I would close this trade out immediately. I would not let it come back down to stop me out. So understanding that when you get into a move like this and it breaks this lower high, if indeed you are in the right trade, this market will consolidate and continue very quickly. It will not pull back inside. So at the break of this bar, I'd probably be closing that trade if it broke the bear candle at the high. But understanding importantly, we have now a middle structure for a W reversal. This bull candle that breaks away from the bullpen hammer at the low of the day, you'll notice closes above the two little bear candles at the bottom and behaves as exactly as it should. It continues to break new highs on every candle for a very fast vertical move, 50 pips straight up. We work from the high and the low. This is the low of the day. This is a breakout pullback giving us a low of the day structure. Then the market proceeds to work back down into the low, giving us our bullpen hammer. Trading the break of this is what I would look for. Trading the break of this bullpen hammer with the thesis that this market, when it goes, should go very fast and quickly above the previous day's low. We're challenging the previous day's low. They trap breakout traders. They trigger shorts on the continuation. If they want to trap these traders, this market will move fast and aggressively to not only get them out at break even, but to stop them out potentially with a loss and to catch them off guard. Fast and furious back through the previous day's high. Market then goes into consolidation and we go back to our game plan. We draw our highs and our lows. The market hits the stops, triggers breakout traders, hits the stops on traders that are short, hits the stops on traders that are long in the gap time before forming a low of the day structure in our gap time. So now we have our high and we have our low. And again, this is the same behavior that I will apply every single day to any instrument that I trade. So there's no hindsight. I'm looking for a trade off the low or I'm looking for a trade off the high. Engulfment, pin hammer. The longer this consolidates, the bigger the potential move. the market goes up inside during the gap time. Proceeds to work the low of the day. So understanding now, again, where we're inside of the high and the low, we're inside of a 20 pip box between numbers. If you get filled inside like this, you're inside of the box. So if you are inside, and again, we have a 2-bar engulfment, again, watching how price behaves, you're potentially going to fail at the high of the day. This isn't even, I don't think, 10 pips. Closed at 10 with the spread, 9 to 10 with the spread. The high is at 16. So this market could fail at 16. The high of the day obviously is up here, but the lower high of the session is down at 16. But so once they give us a low of the day structure, they've hit the stops and they move away quickly, they're getting you to chase it inside. You're getting filled inside. So it only takes a bar or two and bang, you're underwater. They hit the stops. So they come down, they hit the stops. They go up top and hit the stops. The master pattern, the basic pattern. Consolidation, hit the stops, expand the range, pull it back inside, and then trend the market. Sideways. This is a day 0 setup. Creeper down, 1 push, 2 push, 1, 2, 3 engulfment in the gap time, just at the open of our US session 12 candle window. This is an explosive potential move, a minimum of 2 times the high low of this box after a strong move up the previous day. Strong move up, consolidation, continuation. That's different than a strong move up. Work the high, work the high, work the high, work the high, trap volume and drop down. This is into the second 2 sessions sideways. We have a full day's volume consolidated before we get our engulfment, and then the explosive move up through the high and the continuation move into the close of the session. So no consolidation into the close of the session. This market is finished at the high of the day. That's a strong move market. My bias is going to be to the upside. So understanding that when the market finishes strong, so we have a US session previously that goes sideways into consolidation at the close, it stays in the 25 pip box. We get a strong, fast move into the consolidation and very little movement in the first session of Asia. We get a high and a low. I'm still biased to the upside. High and a low, previous day's session, they wick back and forth. None of this is clean. They make a high, they make a low, they come back inside and give us our engulfment. The engulfment is inside of the high and the low. Inside, meaning we're looking for our biases long. Somebody shorted this inside. Okay? Somebody shorted this. We're looking for a long. What are we looking for? We're looking for a high and a low. Then we want to see the stops hit and then a trend trade. We have our stops hit on the downside. The stops are hit on the upside. They pull it back. They give a bullpen hammer. Again, you're getting filled inside. Bullpen hammer, breakout, pullback. That pullback engulfment now after the bullpen hammer gives us what? It gives us our W structure. A 1-bar stop. This market should move quickly, breakout pullback, and continue. So the market pulls back down on top of our trade, before continuing. Now, I'm not suggesting that this is an ideal setup. What I am suggesting, though, is recognizing when a market is in a strong move, consolidation, no pullback at the close. This market is in a strong move. We are looking for long trades. But what I am going to say is that when we head into the US session, we get expanding the range in 3 pushes up. We have a higher low on our first leg outside of our 12 candle window. We have a higher low. And then we get a 1, 2, 3 down at the open of the US session 12 candle window, sideways, engulfment, bullpen hammer. Now, we're at the low of the session, the higher low, engulfment, bullpen hammer. This market should move fast and quickly. And on the euro, if I get 25 pips, I'm taking it. At 20, I'd be ready to lock it in because the euro typically isn't going to move. You know, we've had some big moves this week, but generally speaking, the euro doesn't always move like this. And we're also on day 3 up. 1, 2, 3. 1, 2, 3. Now we could be looking at a reversal move, consolidation underneath the peak formation for a move possibly back down somewhere maybe back off the high of the day. So we're currently at the high of the day at numbers, hitting the stops on consolidation as we head into the end of our Asian window, right? We may be looking at a stop hunt somewhere back down to 50 or even maybe even 25. The market may consolidate. It hit the stops off the low. We've had a strong market and it could pull back and stay in a 25 pip box. But right now, day 1, day 2, day 3, this could be our, template for 3 days of rise, consolidation, and drop reversal. We'll watch and see. But point being, high and low, engulfments, pin hammers. This is not rocket science, but it does take skill to recognize it in lifetime and practice, and the willingness to just be patient and wait. You can put all kinds of complicated information into this and call it different names and look at all these different reports and try different things and everything else. But if you stick to the timing window and you stick to the high and the low of the day, and you have a thesis and a plan going into each session, you manage your downside, even if it's 2 to 1. These pairs, these major pairs, are going to move. They're going to move 25 pips. So we've got a clustered volume. We got stops below the low of the day. They've just gone up and hit the stops on the high of the day. We've got an engulfment at the beginning of the session. How price behaves in the next couple of bars on this chart will give us some insight if we have a short sell or if we're just being caught in a breakout pullback for a continuation. Currently, I'm biased that this market could potentially be now reversing underneath the peak formation. We got a consolidation underneath the peak formation. After 1, 2, 3 on day 3, 33 trade, we'll watch and see what happens. Stay disciplined, traders. Stay focused. Stick to the highs and lows of the day. Keep your trading window tight, like be in and out and be done in an hour. The odd time it's going to take a bit longer. But again, if you lock in these pips, you only need to target 2 or 3 really high probability trades a week. Get better at them, get bigger. Keep it simple. Again, just on this note, heading into the session, we got higher lows off of a W in Asia. We got 1 push, 2 push. We may get a 1 more push on this with a middle structure up top, somewhere possibly inside here. Breakout pullback and possibly retesting these higher level longs, hitting stops. Have a great session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.